Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A reactionary bullish harami yesterday, if only just, after the previous session's bearish black crow. It was also a close back up, again if only just, over the potentially important May 2020 low at 107.66. The base of yesterday's action was again on the April 2020 low at 107.25. And below 107.25 we have the 2024 low at 106.93, and then the middle time, currently at 106.47, of the newly drawn and highlighted in dark blue late December 2023 to early March this year 2024 bearish Andrews pitchfork. Topside we have the combination of the very slowly declining long moving average, currently 108.31, and the only slowly declining short medium moving average, currently also 108.31. Beyond that is the upper time, currently at 108.52 of the bearish Andrews pitchfork. Now for your information, we are likely to have a dead cross of the short medium moving average down through the long moving average. Now so far today, a reactionary pullback up, not really very much, but capped by, I think, by that 2023 low. And this time looking like a indecisive doji cross, really, more than anything else. Cable, aka sterling against the US dollar. An immediate countering bullish thrusting pattern and bullish closing white Mariposa yesterday after the previous session's bearish engulfing pattern. It was nevertheless a second close below the combination of the flatlining long moving average, currently 125.85, and the 50% Fibonacci line of the July to October 2023 move at 125.90. This was also the cap on the action. Further up we have the September 2020 low at 126.72, reinforced by the flatlining short medium moving average, currently 126.69, and the slowly rising medium moving average, currently 126.63. The mark is also once again below the previously mentioned general congestion zone formed between December 2023 to January 2024 between 126 area up to the 127.75 area. Further down we have the lows of February at 125.32 and 125.15, the latter apparently being the more significant. After this we have the December 2023 lows at 125 in the 125 even zone. Now so far today a test higher, but pretty much a rejection at the moment of the overhead 50% Fibonacci line and long moving average combination. Right now looking, it's actually like an indecisive doji cross. Euro sterling. An indecisive spinning top yesterday after the previous session's bullish engulfing pattern, if only just. The market dipped down and through the combination of the short medium moving average, currently 85.47, and the combined lows of December 2022 at 85.45 and December 2023 at 85.47, but quickly pulled back up as it approached and rejected the lower bull trend line, currently at 85.31 of the purple highlighted late January to date breached but not broken expanding wedge pattern, and that's currently 85.31 to 86.26. Meanwhile overhead, the market likewise approached and rejected testing the combination of dark blue upper time, currently at 85.85, of November-December 2023 bearish shift pitchfork, plus the declining medium moving average, currently also at 85.86. Overall, the market still remains within the breached but not broken purple highlighted late January small expanding wedge pattern, and also in between the upper time, currently 85.85, and the middle time, currently 84.88 of the bearish shift pitchfork. I recently had highlighted the possibility of two pipe bottoms, the ones seen in mid-February and early March, might lead to speculation we might have a larger double bottom pattern formed with these pipe bottoms. However, this idea is rapidly disappearing due to the lack of any incentive to carry it out. So far today, a small move higher, though still within yesterday's range. US dollar against the Japanese yen. A small, indecisive spinning top yesterday as the market seems to be having doubts about the idea of pushing higher. The close was just under the August 1990 high at 150.158, and once again prices did not seriously challenge the recent high last week at 151.97. Below is the congestion from late February between approximately 150 to 150.75. Seems the top side is still capped by the same capping peak formed by the high back in November last year at 151.92. Now beyond November last year's high, we have the middle time currently at 153.47 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. Overall, we are still within this bright red highlighted pitchfork, the lower time below currently at 146.20. We are also still within the larger purple highlighted February 2022 to January 2023 bullish shift pitchfork, in between the middle time overhead currently at 158.91 and the lower time below currently at 144.83. So far today, not much, but we have had a dip below yesterday's low, though not as yet a move over yesterday's high. It actually wouldn't take much to make a key reversal day today in either direction. US dollar against the CNH, the offshore Chinese yuan. A third countering bearish engulfing pattern yesterday after the previous session's counter to the counter bullish harami. Below the market we have the dark blue highlighted crossover of the flatlining upper trend line currently at 723.68 and the rising lower trend line currently at 723.71 of the mid-January to date ascending triangle pattern. All this is in the shadow of last month's monthly key reversal up here in spot USD CNH, the offshore Chinese yuan. However, that is not all. As though I do not show it here on this chart, there is also monthly key reversals up for March in USD CNY, the onshore Chinese yuan spot, plus monthly key reversals up in March for the USD CNY 1 month NDF and 1 year NDF. All these are quite significant, especially if you have follow-ons. Looking overhead, now moving some distance away, we have the capping action of the neckline currently at 729.54 with a bright red June to July 2023 head and shoulders continuation pattern. And looking below, we have the now flatlining long moving average down there currently at 722.99. Okay, so 3 weeks ago I laid out some ideas for potentials below for the then break out lower from the ascending triangle pattern. Thus, a primary target X is down in the 716.05 zone, for secondary harder to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now, but for the moment I'll keep these targets on my daily chart, as we've already had a possible false break lower and now maybe a possible false break higher as well. So, as I say, I'll keep them on for now, but I'm happy to retire them in a heartbeat. But, and this is a big but, I'm also mindful of the potential top side for the recent move higher. So for good order's sake, I've marked for now a primary target X2 top side for a continuing move higher at 730.05 and a secondary, much harder to reach target X3 up at 732.80. So far today, well, a reactionary move back up, verging on being a fourth countering bullish double right now. US dollar against the Mexican peso. A reactionary bearish black crow yesterday after the previous session's bullish harami. Prices pierced once again the overhead 2023 low at 1662.11, but was somewhat surprisingly capped once again by the declining short moving average currently at 1667.40. This is now the third week that we're seeing this short move average acting as a de facto downtrend, so keep your eye on that one. Further above, we have some congestion between 1670 even to 1680 even, dating from August last year, within which currently sits the capping bright red neckline currently at 1673.89 of the February to April 2021 head and shoulders top, followed by the dark blue middle time currently at 1684.04 of the December 2023 to January 2024 mildly bearish shift pitchfork. Meanwhile below, we have the lower time currently at 1650.28 of the same bearish pitchfork, just ahead of some significant congestions dating from 2015. And so far today, another reactionary move, this time back upwards, but small so far and hesitating on approach to the 2023 low at 1662.11.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.